Hi, everyone. I'm Rob Tarkoff, EVP CX in the Oracle Data Cloud. I am extremely excited to have with me today David Malfara from McKinsey. David is a customer experience expert and has done some great research that we're going to talk about during this segment. David, maybe you can introduce yourself a bit.
Yeah, hey Rob, great to be with you. Thanks so much for having me on. Dave Malfara, I am an expert in McKinsey's customer experience practice. I have the pleasure of serving across B2B and B2C industries on a whole host of customer experience topics, including things like journey design, design and implementation of measurement systems. I also lead a pretty interesting relationship we have with the Disney Institute that's helping organizations build more customer-centric cultures. Great to be with you all today.
Awesome. Thank you, David. One of the things we're going to be talking about today is how to frame the CX transformation conversation in the language of the CFO and the finance department. Increasingly, this is becoming a big initiative among CX professionals and companies in general, is how to map the two languages, the two sides of the equation. And a lot of that is driven by the changes in the world as the CFO is seeing them. When the CFO and the finance department looks at all the changes happening, I think driven by the pandemic and even before that, they see a big need to flex the business model. So as brands change the way they engage with customers over new channels, new buying patterns, moves from transactional to subscription, this is causing a lot of angst in the CFO office because they have to change the business model to support that. And we know that great experiences start with being able to empower whoever gets to the customer first, but oftentimes that has significant business model impact. And so that's top of mind for the CFOs in the finance department today. How do I flex my business model to serve the needs of my customers? And as CX professionals, we realize and in a sense, we're the tip of the spear to that, which is we're the interaction point through which that new model will either succeed or fail. And a lot of that depends upon us presenting the right offers, the right opportunities, the right flexibility, the right insights to customers in an authentic, empathetic, and contextual way. And we've become more critical as CX professionals to the CFO as they think about not only how do I deliver great experiences, because we all know experience is everything, but how do I keep my customers safe and how do I improve and extend my brand reputation for being able to respond in this kind of time frame. I'd love to start by transitioning to some great research that you and your colleagues have done. You recently co-authored a new piece on the impact of COVID-19 on changes in customer behavior. You talk a lot about what business leaders should invest in to deliver excellence in CX and more importantly, to cement their competitive advantage. So I'd like to start with just getting a perspective from you, David, on which behaviors do you think are here to stay in this sort of next normal, and how should finance, together with their CX colleagues, be thinking about these behaviors as they start to plan their next year?
Definitely, and I think that question is really the critical one, which is how do we start to plan? We're not necessarily here to prognosticate. I think that I would be pretty remiss if I said that I could look into the future and see what behaviors were going to stick. But we are getting asked a lot about many of the things that are going on in the market right now. There's continued economic uncertainty. Obviously, this mass shift towards digital services as people retreat from in-person experiences into more digital experiences. There's a heavy safety mindset on the minds of consumers right now. And so the question that's on a lot of folks' minds is, how do I think about where to invest as I start thinking about the next normal? And so we put together this framework just as a way to help think through that. And I think as finance professionals, we can use something like this to help advise our colleagues. And so just to orient to the framework here, we looked across intent to use services during COVID-19, as well as growth in usage post-COVID-19. Basically, intent to use and intent to continue using. So the growth is on the y-axis and the continued intent is on the x-axis. And this really helps us orient the different types of experiences customers are taking on right now into where they might fall in terms of investment in the future. So just talking through it, starting in the top right-hand corner, the ones that have accelerated a lot and have a high intent to stick, or what we're calling fast accelerators. These might be things like telemedicine, where customers had exposure to it en masse, really enjoyed it, like the convenience of it, and are highly likely to stick around using it even after COVID has subsided. In the bottom right-hand corner then, we have some that just have some potential to stick. These might be things that had pockets of exposure, so things like wellness apps, for instance, that may not have had as much of a broad base of exposure as things like telemedicine, but there are places where you might find niches of stickiness among customers. Moving to the left-hand side of the page now, these are things that might not have as high of an intent to stick. So things that are exciting for now, for instance, are things in the upper left-hand corner. I know that I've vastly increased my use of video conferencing technology, as I think we all have. And these are things that are probably exciting for now. I think that, people are experiencing Zoom fatigue already, even though we do see conferences and things of that nature moving to Zoom and video conferencing platforms. But things that had a really huge uptick because they're filling some kind of immediate need as COVID came on. But there's a high potential that they'll have a bit of a backslide as things return to normal. We can go visit each other in our offices again. And then finally, bottom left-hand corner, these might be things that already had a bit of a presence. So things like delivery, right? Uber Eats and restaurant delivery options were already relatively ubiquitous. Again, they're filling a need in the marketplace right now, and so they had a pretty big uptick, but it's highly likely that these types of things will return to pre-COVID levels in the next normal. So again, the intent of something like this is just to provide a framework we can use to think through our investments and say, when we're advising our business colleagues, when we're thinking about our own businesses, where do we actually invest in the future in a return to service?
That's great. Clearly, fast accelerators qualifies as, if I never have to sit in the doctor's office again, I'm not going to be, in any state of loss. So I agree with telemedicine for sure. The other, element to this, which I think is really interesting, is which of these will be hybrid, right? So you mentioned like video conferencing, and as we return to normal, people will start to enjoy physical interaction for sure. You want to go see your colleagues and work with your colleagues, but I also think there's going to be an adaptability to sort of hybrid, right? Zoom may be an ever-present part of every meeting that we do, and having the camera set up and the environment set up so you can always bring in remote people as a part of that much more seamlessly. That was sort of an afterthought before. It was like if you couldn't make it to the meeting, you wouldn't get the full content. But now making sure we can serve both digital and physical channels with equal fidelity is probably going to be something that we see. So I think it's great. And I think that matrix, what I love about it is, like most McKinsey things, it's a highly quantitative, data-driven model for how to think about it. When you apply your own customer behaviors to that, you can sort of say, where am I in the quadrant? And you can have arguments about, rate of user growth or rate of stickiness or persistence, which I think is great. Let me pivot a little bit to one of the themes that you've talked about in the research, which is about preparing for a digital recovery. And one of the things that you've been exploring, I think, in this next normal, which companies will be able to capitalize on opportunities to adapt to evolving customer behaviors using digital as a key inflection, or as a key asset, if you will. And the first priority you identified is to prepare for digital recovery to meet changing customer needs and expectations in a post-crisis world. So can you just double click on that a little bit, what that means, maybe by industry, by size of company, or how our customers should think about that?
Yeah, and I think it's both to meet the needs of a post-crisis world and to rise to the challenges of a contemporary crisis world. I think both are extremely important. We've just seen such a massive acceleration of this trend towards digital experiences. I think I read somewhere, and I'm probably going to misquote it, but we've already nailed the next couple of years in digital growth in the past 3 to 4 months, right? You just think about a company like Tesla if you want an example of someone who's really nailing this, I mean, they were already set up with a largely digitized process for car buying and even car maintenance scheduling. And between December and March, while other OEMs were declining by as much as 50% in China, Tesla actually grew by 100%. So it's pretty clear to me and the folks that I tend to work with in this space that having a strong digital footprint is really going to be important here. And so if we think through what it really takes to get this nailed, you know, the bar was already so high. And so the companies that are really accelerating now and the companies that are doing this well are thinking about their digital portfolios in three ways. One is that they are really going beyond their comfort zone, right? You know, we did some research and found that 46% of the portfolio for top economic performers are new digital offerings versus 28% for non-top performers. And so they're really investing in the new, right? They're going past their comfort zone and finding new areas, new services, new products that they can offer through a digital channel. The second piece, though, is even though new offers are important, they are focusing on the core and building a digital backbone for the core businesses that really are going to help lay the groundwork for a broader transformation down the road. Finally, they're thinking about M&A activity, especially if you think about the previous chart as a reference and you think about the orientation of how consumer preferences are changing, thinking about where you might want to invest so that you have the longevity and decide where to acquire versus divest even, I think is an important aspect of your digital offering as well when you think about the full portfolio of assets.
It's interesting. I mean, I'm just looking at the middle here. About 80% of companies believe the core business model should be digitized to remain viable.
Mm-hmm.
You know, when you think about trapped economic value that's in that transformation, it's, you know, use Tesla as a great example of, you know, pulling the future, you know, forward with all the advances they made, but just think of the entire economic opportunity in digital transformation for 80% of all traditional businesses. It's mind-boggling to think about what that'll do, not just to the providers that support that, the Zooms and the Slacks and all of those, but how they'll redefine that into a new digital strategy. And we're working a lot, it's interesting, we're working a lot with customers who originally started with experimentation in digital and are now quickly saying to, you know, the experimenters have become the biggest assets in the company. They're the people who are going to pull the future forward for us and figure out whether we're going to survive. So that's great. I'd like to explore another theme with you beyond digital. So while you're transforming your business into digital, obviously you have to do it in a safe and contactless way, because whether it's COVID or something else, I tend to think people are going to expect a level of safety and you know, empathy for what they want to go through in doing business with you. And so you've talked about creating a safe, contactless customer journey. I'd like to explore a bit with you. What are some of the elements that go into that? And then maybe specifically, as you're designing that and planning for that future, where should finance be involved? At what stage? Sort of how early do they get involved and how they help shape this future?
Yeah, absolutely. And I'll actually talk about that first one first before we even get to what's on the page here. I think very early on. You know, it's funny, I think, Rob, you and I talked about this before. I actually have a finance background. Before I came to McKinsey, I worked in finance at a couple of pretty large organizations that I think everybody would be familiar with. And you know, I was never part of a discussion talking about customer experience. And in hindsight, I think it's a real flaw in the way silos can start to come up. In the organizations I work with, you know, finance getting involved from the very early stages in agreeing as a whole how we're going to measure value of investments in customer experience. How will we measure the ROI so that we're getting projects through and making sure that customer experience is not just a science project, I think is vital. And I think the word you brought up, designing experiences, is really the core element of this second theme to talk about here around safe experiences. And having finance help think through how we're going to prove out the value of each of the different elements of design is extremely important throughout the whole process. But if I talk about this safe and contactless engagement for a minute, making our businesses safe for customers, employees, not just the perception of safety, but actually being safe for customers and employees, it's pretty clear that it's going to be vital for a strong return and the reimagination of multiple different industries. You just think about everything from restaurants to hotels to air travel, banking, anything that has a brick and mortar presence is really going to have to think about this, and it will be an evergreen topic. Customers will continue to recalibrate their expectations for safety as we move through the stages of the pandemic. So companies are going to have to respond accordingly. And some of the simple adjustments, things like having hand sanitizer stations, having footprints down on the ground for social distancing, all these things have really become ubiquitous. So if you want to be known as an organization that's really making some headway in this area, you're going to have to take more of a human-centered design approach to safety and a safety mindset. And if you do that, you can really end up with some loyal, passionate customers coming out of it because you're doing the right thing for your customers and your employees. And so what's on the screen right now is really just a design thinking framework. We call it the idea framework, to map out customer journeys and identify places of high anxiety or high touch, basically hot spots throughout the experience, and come up with new ways to address those concerns to create a more safe environment. And so just to walk through the framework quickly, identifying journeys and risks. This is a pretty common process that we go through in customer experience to map out a customer's journey from end to end and identify all those touch points as you move through the journey. And here, the really important thing is to diagnose, which is step 2, the potential risks. So it's high touch areas, multi-touch services, places where you might come in contact with other customers, other employees, basically the areas of high anxiety for the customers. And then from there, the really important part is to design and execute new solutions. And we're not talking about taking 6 months to design, a brand new experience in a store or in a hotel. We're talking about weeks, right? To come up with new solutions, put them in stores, put them in these high touch areas, test them out, see if they're working, get the feedback. And the really important thing is to work with your employee base and to get the feedback from your employees and the feedback from your customers to adapt and sustain. In other words, constantly be refreshing and renewing. And so some of these, again, bringing it back to how finance can help, successful solutions will need to be scaled. And so thinking about where we invest in successful solutions that give customers that feeling of comfort and security so that we can return to service, and making sure we have a good view on ROI for these investments, I think is where finance can get involved in this kind of process to redesign a future state.
It's interesting when you talk about feedback and sort of constant iteration and agile process. I'm reminded of all the times that finance has been a barrier to test and learn type budget cycles, right? Let me just try these things out because I don't know exactly how to do it. It's interesting. I took my car in for service last week, and when I went to go pick it up, I was really impressed by the complete contactless process of kind of getting your car back and everything, until the service tech handed me a basket of pens. I thought, I wonder how many germs are across all the, it was perfect up until that last moment. But there's got to be somebody who's given them feedback to say, you're 9/10 of the way there. If you just figured out how to, wipe down the pens or provide an alternative to a standard issue pen. But this requires that iteration, and finance has to be enabling budgets to, kind of accommodate that you buy something and get rid of it. Yeah.
Yeah, it's a great point. I mean, I'll tell you, I work with a few large organizations, and we've done plenty of work with teams that actually just set test and learn budgets, right? So this is part of their customer experience team. And it's separate from the budget that you had set for scaling long-term solutions or for any individual department. And I think that's one great way to say, hey, look, we're committed to rolling out new solutions. It's a lot of the way that, the technology companies think about constant iteration and rollout of new cycles of development across their product portfolio. And so if you can think about things in more of a test and learn way, and let this be evergreen. Let your solutions adapt to the changing needs of the customer as we move through this crisis. I think you'll be much more successful.
Yeah, I think one of the keys, though, for the CX part of that equation is you have to get feedback quickly
100%.
and sort of fail fast or win fast. And so let's move to the topic on feedback. You've talked about how companies obviously need to invest in data and technology and systems to require the experiences, but they need to be able to anticipate customer feedback, and you don't just ask for it, but you have to design it, to use that again, you get design it into the system so you can predict customer sentiment and customer value. It's that front end prediction part that you've emphasized a lot. Tell us a little bit about that.
Yeah, definitely. I mean, this is I'd say a bit on the bleeding edge of what's going on in customer experience right now, and the focus has become even more acute given the crisis that we're going through. The need for feedback and insight has really accelerated, and the use of traditional technologies like survey-based systems is a bit hamstringing us for a few reasons that you see on the screen here, right? 98% of organizations we work with still use some type of survey-based system for measuring and taking action on customer experience. The issue with surveys is, you tend to see about 7% of your full customer population from the survey that you send out. So they're a little bit limited. They're inherently reactive because it typically takes between 4 and 6 weeks of a cycle to get the feedback and then take some type of an action after you've gotten done processing the survey data. And even then, they're limited to the number of questions you ask in the survey itself. And so when you try to disaggregate a survey score like Net Promoter Score, customer satisfaction, customer effort score, you're limited to the questions that are asked underneath that top line score to try and explain how that score is moving. And then finally, it's not inherently tied to value in any way, right? None of these surveys are inherently tied to value. We try to do correlations and say what's 1 point of customer satisfaction uplift worth, but it's really a correlation more than anything. It's not really something that you can usually hang your hat on. And so, when it comes to overcoming these limitations from the very reactive systems we use today, we see a big shift in organizations moving towards predictive systems. These are systems that aggregate your customer operations and financial data into data lakes, and then using algorithms to do predictive analysis, even doing things like predictive customer satisfaction, so that you can actually model a customer's behavior and take predictive action with a customer before something goes wrong or in advance of a transaction occurring to really create some type of surprise and delight occasion. Just to give one example, we worked with a large airline client on creating a system like this. And their first use case was basically to help remediate customers who had a bad experience. Basically, they were providing some type of compensation for a customer who had a canceled or delayed flight. And so they had this predictive system in place that every day for every customer, 100% of their flying population, they calculated a predictive score for that customer's satisfaction and a predictive score for how they would perform on revenue over the next 12 months. And they used those two scores to help prioritize the ROI of their customer experience dollars spent for when they're providing compensation for the fact that, hey, you missed your flight yesterday. And so they saw some really amazing uplift in things like satisfaction, reduced intent to churn. But the biggest thing that I took away was they were so well able to target using the system the customers that they were highly likely to lose if they didn't do something about it. So the ROI was fantastic on a case like that. And so if you think about those types of systems, just for those who are looking to get started on something like that, I think there are a few things to think about. One is, do you have the available data streams necessary to get this done? Most of us do, but it's really a question of where does the data sit, who governs it, can you bring it together in a way that's really useful? The second is you have the talent you need to bring that together. And here, I think there's a real collaboration that's needed between customer experience teams and folks like data engineers, data architects that can actually clean the data, make it usable, and put it into the computations that are necessary to do this predictive analysis. Third is thinking about the technology infrastructure. Do you have the right tools and partnerships ready to put something like this into production right now at scale? And then finally, do you have the right use cases, right? So like the example I just gave, with the airline client, do you have a good high value use case where you can try it and prove the success right away? And I think thinking through those four things early on can put you in a really good place when you're starting to think about investing in these types of data-driven customer insight solutions.
It's interesting when you talk about surveys. For quite a while, many survey companies, and I don't mean to bash survey companies, but they sort of claim the mantle of we're CX. And what I thought was really interesting about that is a survey is feedback you give after the customer experience has happened. The critical thing is, can you shape the customer experience to what is going to be have the most impact? And in order to do that, you have to collect signals up front, like you're saying, predictive signals that enable this, as the slide says, proactive intervention. We've been a big proponent of what we call the signaling approach to CX, which is, we're a technology provider that can help you figure out how to incorporate those signals. But there's a big part of what you say, which is you have to design a system that rewards the right kind of behaviors and allows you to pivot to change your business. And sometimes that means that not all customers are created equal, right? you have certain large spenders who, the cost of getting it right, or a class of large spenders, the cost of getting it right is, or getting it wrong is a lot higher than with people who don't. So it's an interesting way of changing the dynamic from everybody gets the same survey and that's CX to no, you have to really think about your customer base, each as an independent economic unit, as a sense, and collect the signals that deliver the best experience to them. I think that as part of doing this, it's interesting. You talk about data engineers, data scientists. A lot of those people oftentimes sit in the CFO office, right? The CFO is now building, teams and teams of data analysts who can help them crunch and determine, be in a sense, the audit function for a lot of these CX initiatives. You talk about CX leaders and laggards too in your research, like who's really delivering return. And this has been an ongoing thing in CX for years. Like, what's the linkage to business outcomes? How do we make that tighter so that a CX person can have a conversation with the CFO with as much confidence as, a supply chain or a logistics or somebody who has maybe more traceability in terms of the delivery of their part. So talk about, that strengthening of the relationship, be it in marketing or sales and service, about how a CX leader can strengthen their connection to financial outcome.
Yeah, absolutely. So look, we did a bit of a look at total return to shareholders, TRS, of CX leaders and laggards over the last financial crisis. And we saw some pretty clear trends. Basically, leaders experienced shallower troughs, return to positive TRS faster over the cycle, and they outperformed laggards on TRS by about 3x. So clearly there's real value to be gained here. You talk about the relationship among the C-suite. Really, the organizations that I work with on this topic that have a strong leadership position in customer experience also have a strong commitment to customer experience in the C-suite, but they really have a strong collaboration among their major functions across CFO, Chief Marketing Officer, Chief Operations Officer. Customer experience is not really a topic that can be done in a silo. It really takes a cross-functional lens to get it done right. So having a systematic way to understand customer needs, understand the business case of satisfying those needs, and then the ability to take fast action is really critical. And I don't think you have a mechanism to do those three things well unless you have a really strong sense of commitment and a strong sense of collaboration among the C-suite, and frankly, strong governance to take action on customer experience. CFOs are vital in the process because they can really help their colleagues understand the link to value. They can help establish agreed to frameworks around how are we going to measure the impact of customer experience efforts. And so they can really be the ones who help drive this from a financial perspective and make sure that customer experience is seen as an investment rather than, like I was saying at the top of the call, like a science project, where the end goal is improving satisfaction. Yes, we're always trying to improve satisfaction, but leaders on this topic try to, deliver stacked wins on customer experience across things like satisfaction, but also employee engagement, and therefore reduce turnover, reducing cost to serve, improving things like upsell and cross-sell opportunities. And again, I think CFOs are really vital in helping make sure that engine turns really well.
Yeah, it's that last mile of translating your CX investment to metrics and a language that the CFO understands, and actually enrolling them in that process. That sounds to me the most critical here, because if you truly can show the economic trade-offs of canceling a CX project to the same level you can any back office initiative, you're going to be higher on the list. And we've talked about how during this period, a lot of the IT projects have gone from 30 or 40 to 10 or 12. And then we have to make sure that those 2 or 3 top IT transformation projects around CX are maintained. I think translating it into a CFO's language is going to be critical as part of that. We've looked at it. I mean, this is just an example of, the connections we've seen that have to be built, and that we are trying to build through a technical foundation. But of course, there's work to be done in the C-suite people you're talking to about, have that one-on-one with the CFO every week or every other week to make sure he or she understands what you're trying to do to align your marketing initiatives with financial outcomes. Make sure that the head of HR has what they need to know how they're going to measure success of the sales reps through the CX system, or make sure the supply chain person understands why it's important that your field technician know what inventory is available when they go out to a customer, because that's going to make or break the success of the CX experience. So I think those are really important connection points that we try to help facilitate through the technology layer, but listening to you put it in the business language of dollars and cents, I think really brings it home. So maybe we'll just go to one customer example that I just wanted to highlight at that, just because we're in COVID and I'm really psyched about telling first responder stories. But Motorola Solutions is one of those companies that's always built products and services for first responders, police departments, fire departments, building the radio and the technology and the communications infrastructure for that. And they went through a whole period of, budgets were getting cut at a lot of cities during financial downturns. Tax revenues are less. So how do they translate from you got to buy all your equipment up front to a subscription-based model? So I can sort of flex and burst it as my needs require. And they've gone through a complete business model transformation to be able to go from a transactional sort of buy each device separately to a subscribe to bundles of services that you can flex depending on need. And they've been able to offer that out to their first responder customers, which has been great. So that was something that we feel very proud of at Oracle, because it's an example of, hey, times are calling for a digital-led business model transformation. The CFO at Motorola obviously had to get on board with that, but it was CX-led, because in the end, the end customers of Motorola said, hey, you're empathetic to what I'm going through right now, and you're giving me flexibility in the way I configure choice and the way I choose my service offering. So that's been pretty exciting. Just to wrap up here, I think I've taken away a couple of things from your research and your deeper dive into it here, David. One is partner with your CFO. That didn't come through. All the expression of the McKinsey research is in language that CEOs and CFOs consume on a daily basis. So if you want to talk about how to get your CX investments prioritized, figure out how to talk about these business model transformations as part of it, the business adapting to the next normal. And it requires people, as you've said, think beyond your silo, think beyond marketing, sales, and service. It's no longer an isolated thing. It's tied to the overall existential issues, if you will, that a business is facing. And then, as you said, I thought your design retail example was a good one. Like, don't hand the customer the basket of unclean pens at the end. Figure out how to keep brand safety paramount in the recovery, and that way you'll create these experiences that build, protect, and differentiate. So I encourage everybody. I've read it since we first started discussing this, that the McKinsey research around this is incredibly valuable and incredibly grounding for anybody in CX to think about the potential impact we can all have on our businesses. And I encourage everybody to look at that. I want to thank David for joining us for this series. It was really, really great to hear what you the insights you've been bringing to this. And I'm recommending it, by the way, to all of our prospects. I say, look at the piece David wrote on this, because it's truly building connections that I think we've needed to have there. Maybe that's one of the goods of COVID, is that it brought this to the forefront for CX professionals. So I want to thank you, David. Thank everybody for joining, and hope you enjoy the rest of the content from the Oracle Live Experience series. Thank you very much.